Welcome back to the Microlearning Institute. In this tutorial we review IAS 10, which relates to events after the reporting period. An event after the reporting period refers to events, both favourable and unfavourable, that occur between the end of the reporting period and the date on which the financial statements are authorised for issue. IAS 10 classifies some such events as adjusting events. An adjusting event, by definition, provides further evidence of events that existed at the end of the reporting period. IAS 10 prescribes the accounting treatment for adjusting events, and this is that we adjust the assets and liabilities at year end. Also, we disclose the nature of such adjusting event and the financial effect of that event. For example, settlement of a litigation against the entity after the reporting date in respect of events that occurred before the end of the reporting period may provide evidence of the existence and the amount of liability at the reporting date. Also, declaration of bankruptcy by a long outstanding receivable after the reporting date may provide evidence that the receivable was impaired at the reporting date. And also, detection of fraud or errors after the reporting period may indicate that the financial statements are misstated. IAS 10 classifies other events after the reporting period as non-adjusting events. A non-adjusting event is defined as an event that provides further evidence of events that arose after the end of the reporting period. IAS 10 prescribes that we do not adjust recognized amounts for conditions that are indicative of conditions that arose after the end of the reporting period. An example of a non-adjusting event might be dividends that were declared after the reporting period, as these dividends were not a liability at the end of the reporting period because at that time there was no obligation. Other examples of non-adjusting events include changes in the market value of investments or effects of changes in currency exchange rates after the reporting period. The accounting framework says that an entity shall not prepare financial statements on the going concern basis if events after the reporting period indicate that the entity shall not be able to continue as a going concern. This is irrespective of whether such events are indicative of conditions that arose after the end of the reporting period or not. Events after the reporting period may require an assessment of the applicability of the going concern assumption at the reporting date. Thank you for watching this short overview from the Microlearning Institute of IAS 10 Events after the reporting period.